In this video, we're going to demonstrate how Forex Source subscribers made money trading a sentiment shift involving bad economic data for the euro. Now, the move we're going to be looking at is this one here on the euro US dollar, which is that 100 pip drop to the downside. So let's break this down and see how you could have predicted and caught this move using our market commentary. Now, before we begin, don't forget to hit the button to subscribe or follow us and hit that bell notification so that you'll always notified every time that we release a new video. So firstly, we need to understand the context or the baseline surrounding this pair before the move took place. Now for that, we can go inside the Forex Source terminal on the 17th of March in our video commentary section. Now we release daily video updates for all of the major currency pairs and give our current bias as well as the reasoning behind it. And in the video we did for the euro US dollar, we explained that the bias for the pair was firmly to the downside. This was due to the euro being pressured by a further exponential rise in the spread of the coronavirus, as well as the containment measures being put in place around Europe that would severely impact the Eurozone economy. Now, on the other hand, the video also explained that the dollar was well supported due to a massive demand for US dollars as investors were rotating their portfolios into cash and as banks, governments and companies were all scrambling to get cash rich due to the overall economic uncertainty. Now, once the baseline was in place, the next step was to identify the type of breaking news that would generate the biggest market moving shift. So for this, we can head back to the terminal and open up our daily risk event outlook report on the 17th of March. There we can see that we highlighted that we were waiting for the latest German ZEW data. And even though markets were not really focused on economic data at that time, that given the rapid escalation of the coronavirus, that we might see further downside in the euro if we printed below the market's minimum expectations. So now all that we needed was the next trigger, in other words, the sentiment shift that we were waiting for to actually take place. So also in the terminal, later on the 17th of March, we had the release of the German ZEW data and saw that both metrics actually came in much lower than the markets were anticipating. And after this, we made another quick follow-up video. Also in the terminal, basically highlighting that the bad data had a very big likelihood of now seeing further momentum to the downside in the euro US dollar pair. Now quickly going back to the chart. Now after the event, the euro US dollar was actually just testing that 110.50 support area to the downside. Now you could have either have jumped in directly after the ZEW data, or you could have waited for the pair to break below that important 110.50 psychological level. Either way, you could have traded the pair to the downside and looked to take profit at that next significant support coming in at the 109.50, which coincided with the support going back all the way to the 28th of February. And all in all, it could have banked you a very attractive 100 pips in the process. Now, the focus of these type of trade examples like these are not to showcase a particular strategy, but rather to show you how our commentary and analysis can help you to interpret news and fundamental analysis and turn it into profitable trades like this one. So if you're interested in learning more about Forex Source and how our market commentary and analysis can help you, click the link below and check out Forex Source. Thank you so much for watching, and please remember to post your questions or comments below this video. We do read and appreciate all of them and actually base our future videos on what you guys ask for.